2025. It's been a steady year for the stock markets, with the Nifty gaining more than 6%, but the appetite for IPOs has been ravenous. More than 75 IPOs at last count have raised $14 billion so far, making India the fourth largest market for listings this year, following the US, Hong Kong and China. Just this week, we saw South Korea's LG Global, co-working giant WeWork, take their India units public, along with the large issue from Tata Capital. The frenzy is only expected to continue, with total fundraise projected to cross $20 billion. Now, in a recent report, Bernstein has called India the new IPO factory. But the soaring euphoria also warrants caution. The median returns of the main board IPOs this year has been less than 5%. More than 25% of the new issues are providing negative returns, and foreign investor interest in the primary market has been subdued. Welcome to the Editor's Playbook. This week, we take stock of the IPO market. We have a full house joining me, as always, Prashant, Nimesh, Sriram, and we're joined by the very wise, very young and very grey Hormuz Patakia joining us on the program. Hormuz, welcome to the Editor's Playbook. So I'm going to start with you, Hormuz, because you, of course, been on a weekly basis recapping what's been happening in the IPO market. We just gave our viewers some indicative ideas of the trends that have emerged in 2025 so far, but pass through what the data is telling us. Give us a report card, so to speak, of what's happened in the IPO market.
Firstly, thank you. Had I known that I would be part of this today, I would have colored my hair. But
That's your charm, or come on.
With this look, you're looking young.
Very editorial.
Young, wise,
very
and
editor
grey.
like Hormuz.
but it's been that kind of. The last few months have been clearly the way the IPO market has picked up pace, right? In the last 3 months, the July to September period, we've seen almost 1/3 of the total number of IPOs that we have had come up in just the last 3 months. And it's not as if that the market was doing so well that indices were hitting all-time highs, the people were looking to capitalize on it. But it was just this rush, some for exits, some of them to raise capital as well. And it's on both sides. The recent IPOs have presented both sides of the story. You saw LG yesterday. The bids were over 4.5 lakh crores. You've never seen such kind of bids in any IPO, for that matter. But on the flip side, there have been recent listings that are down 30-40% in just the first 2 days of their listing. So it's not as if it's all been good. The IPOs that have listed so far, at least 30 of them are trading below their issue price. And 15 of them at least are trading with single-digit returns. So it's not as if that even if there has been a rush for IPOs, it has delivered very strong returns for investors and so on. But the appetite continues. The pipeline is a huge one as well. We have Lenskart lined up, we have Grow lined up, and there are so many more that are lined up going forward as well.
Misho.
And PhonePe, indeed. So it's a huge pipeline that lies ahead. It just remains to be seen what kind of investor appetite continues going into the fourth quarter as well.
So,
That's important. Yeah, that's important, Nimesh, and I wanted to get you to comment on what we just heard there from Hormuz, because I remember that when we were chatting, I think it was a week or 2 weeks ago, and Nigel made the point as well that, look, while it seems like it's gangbusters, we went through this phase where every day you were talking about a new unicorn being minted, and the trend in 2025 has been about IPOs being minted, and I like the Bernstein IPO factory nomenclature for what we've seen in 2025. But you've been talking to fund managers, etc. Nimesh, what are you hearing?
So, let me put a bit of a ground check. As even, Hormuz pointed out, a lot of the recent IPO listings have been a bit disappointing, right? So now it's hitting the reality check. It's not like you get in an IPO and you're going to make money. So that's one thing. Second, from a market perspective, look, India has already seen $14 billion of fundraising, but India has been a rank underperformer this year Y2D, right? I mean, India is just up 3-4%, whereas the other markets are up 12, 13, or even in double digits. So in that sense, India's underperformed. And one of the reasons for this is the big suck of liquidity through the IPO market. Having said that, we've hit $14 billion. Given the pipeline, what Hormuz is talking about, and what's in the public domain, I think we will be as good as what it was last year. Last year, we hit $21 billion, 21.3 to be precise. And looks like, with the kind of trend it is, even this year could be $20 billion plus. So $40 billion of IPO money is really a big thing. And this is all domestic money, right? FIs have been net sellers in the Indian market. And even in the IPO market, Shireen, the breakup of the FI participation in the IPO market is not more than $5-6 billion. So all success of this IPOs of $14-15 billion is large part contributed by the retail money, the mutual fund money, so to speak. But now it is hitting a bit of a reality check. Even in the unlisted market, look at what happened to NSGL, or for that matter, even Tata Capital. The unlisted market price was 1,100 rupees, and the IPO came at 350. So it was a bit of a shocker for a lot of the unlisted investors as well. So my sense is, the IPO market is giving a bit of a, equilibrium to this market because of the supply. But now it's hitting a reality check as well for a lot of investors, both retail as well as institutional investors. It's not one way, making money in the IPO market.
Yeah. No, absolutely. There is no such thing as a one-way street, as we've often come to realize. But, Prashant, I want to bring up that point that Nimesh was making there on vocal for local. I mean, that really is the headline, isn't it, as far as the IPO story is concerned?
Oh, absolutely, Shireen. Just look at the numbers, and I think they are stark. It's in some ways a different version of the same statistic. The big story, of course, has been that locals have been big buyers of equities.
Whether it's open market
across
or
the board,
IPOs, any which ways.
And foreign investors have been big sellers. So $14 billion, Nimesh, right?
Yeah.
This year,
IPO.
in terms of IPO money. FIIs have sold $17 billion, and local investors, that is DIIs, have bought about $66 billion of stock. And the other, in a way to look at this is when we say locals have bought $66 billion, but the market has not done very much, it's also because of all of this, right? I mean, IPOs, $14 billion worth of IPO sales.
Promoter sales,
block deals, and we're not even counting all of that.
Yeah.
So you count all of that, I mean, the numbers start to make sense. I just want to make a couple of broad points apart from this as well, right? So, for this, not for the sake of it, but I also think I want to take the other side of it. IPOs, and it's a question I think we've addressed on this program a couple of episodes earlier, which is what is the right time to come in at the time of an IPO? So this is, I just pulled up, the exact quote of what Warren Buffett has said about IPOs, right? And this is the exact quote. He says, an IPO is like a negotiated transaction. The seller chooses when to come public, and it's unlikely to be at a time that's favorable to you, right? He again said, by the way, at the AGM, and this is from a quote from the AGM, you don't have to really worry about what's really going on in IPOs. People win lotteries every day. You don't want to get into a stupid game just because it's available. Now, but I think, just to qualify that last quote, Shireen, what he's talking about is that listing pop, that lottery. That, you put in money because you can make a quick 30-40% listing gains, which is, I think, why IPOs as a concept also get a bad name, right? Which is that people are playing for that day one listing pop, and that's the lottery aspect of it, which is what you don't want to do. But having said this, just to take the other side of the argument here, it's about capital formation, Shireen, right? As you yourself were alluding to earlier. And IPOs are, at the end of the day, allowing companies to raise money, which is essentially, building businesses. Of course, many of them are exits. I think about 50% of what that $14 billion, about 50% is promoters selling stake. But the point is, I mean, what are they doing with all that money? Yeah, sure, they're buying some houses and they're buying, but they're also putting it back to the market. It's again going into companies which them are using this money so it's like a virtuous cycle in that sense. So there is that healthy aspect of it as well, which I think, while yeah, I mean, as the title says, beyond the hype, and I think beyond the hype, it's the real story, the fact that markets are liquid, they're deep, they're allowing for this kind of capital formation to take place.
I just want to add one point to what Prashant said. Just to clarify, Shireen, while we're talking about IPOs, I just want to make a point. In the recent trend, it's not the IPO, it's actually an FPO. There is very rarely an IPO wherein the money's been raised for the company, for the capex or for the growth, right? This is largely an exit from a PE investor or a promoter. So from a retail investor point of view, I think one needs to be very, very careful. While we call it an IPO, is technically an exit for an
But that
for a
number,
PE
Nimesh, is about 50%. So $14
No,
billion.
one second. One second. I just want to come in on the point that Nimesh was making, because I think that is an important point. And you know, when you talk to the likes of Nikhil Kamath, you talk to the likes of Sridhar Vembus, and the question being asked of them is, why aren't you IPOing? Why aren't you IPOing? And the fact of the matter is, they don't need to raise the money. They don't need to provide the exit. They're sitting on enough cash at this point in time to fund whatever growth plans that they have, and they're not dependent on the need to provide an exit to an external investor, because they never drew in funds from an external investor. So their story is different, and that also bolsters the point that Nimesh was making. But there's another interesting aspect on why perhaps we've seen so many of these companies approaching the IPO market, approaching the public markets, and because we've actually seen the private markets go into a bit of a funk in the last few years. And after that kind of accelerated pace where, you know, big checks were being written out practically every other day, we did see a private market correction. We did see a private market holding back, so to speak. I mean, you talk to investors and everyone talks about how much dry powder that they were sitting on, and suddenly people were congratulating each other on the dry powder and the dry ammunition that they were sitting on, not on how much they were actually putting to work. And so that also pushed a lot of these companies, especially these new age companies, startup companies, loosely, if you like, to look at the IPO market. So that's been another interesting aspect on why we're seeing this big rush for IPOs. But go ahead, Nimesh.
So, Shireen, you know, the other part, I mean, you know, while we're talking about IPOs and FPOs and whatever, this is also a good point, because it's bringing in a bit of equilibrium to this market. Look, you know, as Prashant pointed out, $64 billion is what the domestic money has come in. And of course, a lot of IPO has been sucked into. Had not been the case, you know, India market would have been at a different level. The P's would have been at, every stock would have been at 100 P. So from that perspective, when I talk to some bankers and all, they say, you know, it's needed that supply comes in, because it will just bring a balance to this market. Otherwise, there wouldn't be a balance to this market. That is one side of it. The other side of the problem with the IPO market is, I was talking to some fund managers who were for the Diwali show, and you know, everybody seems to be tired now with the kind of amount of IPOs which are coming in, the kind of bandwidth they need to put in to evaluate these companies on a daily basis. You know, the biggest fund manager of this country was like, Nimesh, I'm done with. I've stopped meeting companies and I've stopped looking at IPO market.
That's a very interesting, right? So the top, the biggest.
And for the kind of returns, the effort is like, you know, not.
Exactly. But that's also a bit of a phenomenon of the pricing. These guys, the top 4, 5, they do 20, 18, 15 IPOs in a day, in a year, and they make, you know, 20,000, 40,000, depending on whatever number. Goldman Sachs will do 2 and cover that number.
Of course.
So,
you know, just one more thing. I think Hormuz was pointing out the number of companies which have listed with gains and right. How many? 20%, 25% of.
Almost a third of them are below their issue price.
I was just thinking.
That table is coming.
Yeah, there you go. I was just thinking, even forget the IPO. In terms, if you look at the just average chance of you making money, forget about in an IPO. I think this would broadly be around the same, right?
On the same. And
one should generally assume that, you know, but that's also true in secondary markets. That 20% of the companies, I mean, it will involve frankly, shady businesses, not all that strong fundamentals, etc. So I think when you look at these averages, I mean, so the point. What I was saying is that
agree with Prashant.
The listing pop is essentially the listing pop game. I think is what gets this entire space a bad, and that is the reason why a lot of people, when they say, right, and I think we've discussed this as well, the way to invest in IPOs is list, give it some time, because what will happen is that fizz will get out, all that, you know. Everything will go out. There'll be a reality check, and you will find better prices.
That's the power of FOMO.
And there are so many such examples. There's so many such examples of that. In the listing day pop that you play with, Idea Forge is a case in point here.
Yeah.
The stock doubled on its listing. Today it's below its IPO price. And so it's that kind of a thing.
That's the reality with most of the IPOs, Hormuz. That, you know, after 1 month, 3 months, 6 months, whatever, that euphoria will die. and you will get 8 out of 10 IPOs below the issue prices, and then nobody will chase them.
I think that is the one lesson that viewers should take away, which is, wait, don't be, I mean, it's very difficult. It's human nature. FOMO is, I mean, but I think, the LG...
FOMO, what?
That is, it's there everywhere.
Every year iPhone launch is a...
said all this,
iPhone launch is a metaphor. iPhone launch is a metaphor for IPOs. Right? If you buy it on the day it launches, you pay 2x the money. 6 months later, you probably get it for cheaper.
Do you 6 months later prices go down?
Yeah.
iPhone 15 is now available at 40. 2 years later now.
But to get back to the larger debate, and I know, Prashant, you've been looking at that, and Sriram, you've been looking at that as well, on the companies that are choosing to go down the IPO route and the companies that are choosing to stay private. As we discussed, providing an exit is probably right on top of the list of why a company chooses or is choosing to go public at this point in time. And of course, I think what's also interesting is, and this is backed by the conversations that I've been having. I remember the conversation that I had with Sameer Nigam's PhonePe. This was about a year and a half ago. And I asked him, I said, look, do you intend to list? When do you intend to list? And he said, till I can look somebody in the eye and say that, I have clear line of sight on profitability. I have clear line of sight on being able to honor the money that I receive from the public markets, because it's a responsibility and an accountability as well. And I think that that also gives you a sense of at least the maturity, so to speak, of the market, and of how the founders, perhaps on the back of the experiences that they've witnessed themselves, are now treating the public markets, which I thought is a good sign, as well.
Absolutely.
I also want to add what Shirin, you said. See, IPO, in a sense, if an investor is matured enough and if it does the right due diligence, I think it's a great instrument, because otherwise you won't be able to play the India growth story, right? I mean, so many new age companies got listed. Zomato at 3 lakh crore market cap. I mean, it hit a low of 60 rupees and now it's at 300. So had you been judicious enough to buy at the right time, at the right price, you would have made money. And that's where wealth creation is happening for retail investors as well through these IPOs. So many good businesses are coming, via the IPO market, and that's how you can play this. So the only limited point here, what I wanted to make was, one, you need to distinguish between an IPO, which is a fresh money, or a FPO, which is an exit for a PE investor. Are you as a retail investor smart enough to give an exit to somebody who's been sitting on that company for 5-6 years and actually coming at crazy valuation? So that is one thing which retail investors should be careful about.
Give that time. Don't play for that listing pop.
I think don't have that FOMO. That's a limited
I just wrote 3 points, Shirin, I want to make. One is, there's another element to it, right? Which is global companies listing here in India, right? Take the example of LG. Hyundai.
Classic example.
But I mean, in a way,
you couldn't play Hyundai otherwise had it not been listed, right?
Exactly. And the point also is that all these companies, like LG, by the way, came to the market around the time of Hyundai. People had a bad experience with Hyundai around listing.
Yeah.
And by the way, LG was asking for a 30-40% higher market cap. Yeah. And of course, but the point is that all these companies, you just go back to their home markets and look at what their P multiples are at and what they're, and this is another sort of, because the people are able to get a P multiple, so they all, and it's absolutely true, but it's also why P multiple is based off growth.
Yeah.
Growth rates, and I think there was this one picture which was doing the rounds on WhatsApp, which I think it was comparing Maruti Suzuki and Mazda, and look at total revenue numbers and what market caps Maruti Suzuki trades at in India and Mazda trades at in, the numbers look very out of whack. But I think that's the wrong way to look at it. You can look at the growth rates.
Absolutely.
Yes.
And I think the P multiple is a function of that. So that's one point. Nimesh, we've discussed about promoter selling, right, stake. The one other way to look at it is is that you and I, if we've got to invest in something, right? You don't have cash lying around, right? You got to sell something to do something.
Absolutely.
So maybe that is one other reason a lot of promoters are, been sitting on. It's not to say that we, as a buyer of these issues, you have to be careful. Family office. Diversification. I mean, the same reason at a much larger scale, right? Which is, right? And the other point, Shirin, which you mentioned, PhonePe. I think because the IPO market is so is open, we are for the first time seeing businesses which you don't, there's only, for example, there's a company called Black Buck, right? There's Black Buck and Black Box. Black Box is a data center company. Black Buck is Zinca Logistics. They're trying to organize trucking.
Yes.
There's a peer in China. So these are all new companies which, I mean, you have singular one or two companies and there are more coming. So which I think...
No, absolutely.
Yeah.
And I think it also speaks of the maturity of the Indian public market as well, Prashant. I remember, at the time of Zomato and Paytm and so on and so forth, I mean, the debates and the arguments, is India ready, for loss-making companies to list and so on and so forth? Do Indian investors understand these business models? And I think the Indian market has given a very vociferous sort of message that yes, India is ready and is ready to accept companies, but companies that actually deliver the goods. So it's not a problem that there's a lack of an understanding as far as the business model, etc., is concerned. And I think it's also brought in a fair amount of discipline for the larger ecosystem as well, because there is something to be said. I mean, we can talk about the pressures of quarter se, quarter tak, etc., but I think it has brought in a certain discipline, financial discipline,
Feroz Aziz,
and rigor, even on part of these companies. Yeah,
Feroz Aziz, on a conversation with you only, I think, Prashant, he said ki the number of people checking their investments, their demat accounts, has now, like for 100 times that they used to do earlier, they do it once. So the maturity of the investor is also that they are not looking, in terms of the equity culture has matured to a point, they're not constantly checking the price every day. These are a lot of them are treating it as long-term investments.
And just to add to what Shirin said, Shirin, I think one credit should go to the regulator as well. The way, the entire ecosystem has been created by the regulator as far as the IPO market is concerned. I guess it's the best in the world, I would say. In 4 days of listing, the very first, I mean, after the issue gets closed, you get the money back.
The allotment happens the day after.
Exactly.
The very next day.
The very next day. LG opened, closed
LG closed yesterday, the allotment happens today.
Correct. In that sense, the entire ecosystem is so much robust now in India as far as regulatory is concerned. Nobody, fears about his money getting lost or shares not coming in or getting credited. So I think some credit to the regulator as well, that they've created such a big ecosystem that every year, $20 billion.
Absolutely, I think the regulator. Absolutely. I think that, it's good news there as far as the regulator is concerned. But, the larger story, I think, and that's why the Bernstein headline, I think, is is an appropriate one, because it talks about this IPO factory. But at the end of the day, I think what it signals is the larger entrepreneurial aspiration.
Absolutely.
This is a new class of Indian entrepreneurs that we're seeing being minted on the Lal Street. We've gone through the era of, Dhirubhai Ambani. We've gone through the era of the Narayan Murthys, Azim Premjis, and so on and so forth. We're now heading into a new era of Indian entrepreneurship, of creating new Indian entrepreneurs. And I think that is also equally exciting about this story, outside, of course, of the numbers. Just going back to the conversation that I was having with the Attenberg guys, and I remember, Prashant, you and I were debating the Attenberg story as a contender for the disruptor category for the India Business Leader Awards. And today, they're talking about looking at an IPO next year, or at least aspiring to look at an IPO next year. So these are, two boys from IIT Bombay who in 2012 decided to set up a company. So I'm saying that there is a larger India entrepreneurial story that's also getting minted
I think
today.
somebody said this, right? It's going to be a $20 billion IPO market every year.
Every year.
That's the expectation.
It looks like, right? Last year was $21 billion. This year we ended up at $20 billion. And if this momentum continues,
and in the next 1 year, you have
could be
Reliance Jio,
a very
Meesho.
normal norm for India. I mean, US still raises $50 billion.
But it doesn't happen like that. If you go back last, I don't remember it, but it's very cyclical, because the market depends on the market.
Of course.
But that's normal. There's nothing.
It's chicken and egg. I mean, the more the IPOs come, the equity markets will not perform. If equity markets don't perform, there is no momentum for IPO market as well. So it's a bit of a.
But the pipeline is strong.
But Yeah. The pipeline is strong, but going back to, I think, one of the caveats that now so many people have put on the table, but I think we should reiterate that pricing. And, Sanjeev Bikhchandani telling me that, look, when he was doing the Naukri IPO, the Info Edge IPO, Rakesh Jhunjhunwala told him, I like what you're doing, I like your company, but tera bhav bahut zyada hai. I'm not going to invest. I don't like the price. So I think, at the end of the day, I think a lot of learnings, perhaps also as far as the appropriate pricing is concerned, is something that we will
because
see.
Prashant mentioned
again,
Warren Buffett, every single news organization, every
go ahead.
website has a Warren Buffett quotes piece. Clearly, nobody is reading it. Don't go for an IPO because it's always on the seller's intent.
No, he doesn't say don't play it like a lottery, which is that on day one you want to make 30%, 40%, 50%, because otherwise.
So the median listing day gains for mainboard IPOs this year is 5%. And you know what? Interestingly, because we are trying to be skeptical here, and we say SME IPOs are, maybe more risky than the mainboard IPOs, their median listing day gains is 4.8%. And even in terms of returns, while there are outliers and a lot of them have, not a lot, some of them have destroyed a lot of wealth, the median IPO returns has only, for the SME IPO segment, is only improving by the year. So as you can see on the screen, mainboard this year's returns 4.8%, SMEs 3%. Last year's, the IPOs that happened in 2024, the mainboard returns were -10. The SME IPO returns were -28. The year before that, SME IPOs did better. 13. The stocks that listed on the SME exchange in 2023 have returned 13%, whereas the mainboard IPOs that have listed in 2023 are -2.6%.
It was a peak frenzy year of SME IPO.
Correct, right? But they have given more. They have returned more money, created more wealth for the investors.
The kind of frenzy that we saw, there was a lot of tightening has happened in the SME market by the regulators and everything. So that also has led to decent companies with a lot of due diligence, and also, that was one phase where that 1 year.
SME IPOs have to be approved by regulator? Not yet.
No, it's
only exchange.
Exchanges, yeah.
Exchange, yeah.
So that is a.
That's the only caveat or an only.
I guess more needs to happen in
Wisdom
terms
of the markets.
So just to add to what Shireen said on the pricing, Shireen, again, pricing is something which, we can say it's a market force. So nobody can really come with the right pricing. This is the right pricing for my stock or for my value. But I just want to add one point as far as pricing is concerned. The good part is because of the sheer power of money that the domestic fund managers are sitting on, at least I could see in some of the big IPOs this year, the pricing power has come to the domestic mutual funds. No more the FIs take a call on the pricing. Okay, NSGL was a classic example. A lot of FI investors were willing to pay a premium, but the domestic mutual fund guys came out and said, no, we want at a certain price, and the IPO had to come at that price. So in that sense, the pricing power, the decision to make at what price the IPOs can come. Now, to some extent, the force has come back to the domestic mutual fund.
And, Shireen, the other thing is the experience itself, right? Which is the fact that, is the IPO like a one-time money grab exercise and run? You raise as much as you can and then scoot, or you leave something on the table and the market rewards you over a period of time. So there is, today we spoke to the management of Ixigo on a transaction. Stock's done phenomenally well. I think over a 1 year period, it would be one of the best returning companies. IPO price was about 120 or something. Okay. So that is one. Look at LG, right? LG is a huge, they're asking for 77,000 crores in market cap. But the point is, you look at the P multiple, there's acknowledgement it is reasonable. They've lowered the price. They were asking for 130,000. They're asking for 77,000 crores in market cap. So, and of course, look at the subscription, 50 times or something compared to what they are. So I think there is that acknowledgement as well, that there is money to be made, and perhaps it's better if you, you price it reasonably, and then there is a...
Now, the example that comes to mind when you say price it well and it comes. DMart is an example, right? The IPO came at 299. Look where the stock is today.
So IPO came at 299. The listing happened at 599.
599, yeah.
And we saw a high of even 6,000 on the stock. So
That's what you'll find when you walk into a DMart as well. 299, 599. So
DMart stock store bid starts from 29
It was
also.
done that way by the money.
So it's 29 to
IPO pricing was done
299.
by the money in that sense. That 299 should be my IPO price. He insisted on that price. So.
with or without GST. But anyway, gentlemen, we're going to have to wrap up this conversation. It is clear there is clearly a move towards the public markets. There is a frenzy as is being experienced in the public markets today. India has emerged as an IPO factory, and India is likely to continue its momentum, its march towards putting more companies on to the public markets. As we pointed out, it does bolster the entrepreneurial energy, the entrepreneurial aspiration, but investors need to do their due diligence. Investors need to keep what is real in mind. Don't go for the listing pop. Don't treat it like a lottery. And of course, understand your companies well. I think that's the message here from all of us. But we will, of course, keep tracking the IPO markets and the listed space for you, as we always do. But on the editor's playbook for now, from Sriram, Hormuz, Nimesh, Prashant, and myself, many thanks for watching. We'll see you again next week. Till then, take care.